Alphabet dropped its second quarter numbers Wednesday, and one figure changed the story before the call even ended. Revenue $119.8 billion. Analysts expected $116.9 billion, beat by $2.9 billion. But here is what drove it. Google Cloud grew 82%, $24.77 billion in the quarter, crushing the $22.4 billion estimate. The cloud backlog now stands at $514 billion. That is up $52 billion in a single quarter. Search advertising added $63.3 billion, a 17% gain, though it landed just below the $63.4 billion analyst target. YouTube brought in $11 billion. Those are broadly solid numbers. Now for the catch. The headline earnings figure of $9.11 per share looks massive, but roughly $99 billion of that came from unrealized mark-to-market gains on Alphabet's equity stakes, primarily in Anthropic and SpaceX. Strip those out, and the adjusted figure came in at $2.85, a narrow miss against the $2.89 consensus. Capital expenditures hit $44.9 billion in Q2, approximately double the same quarter last year. And on the earnings call, CFO Anat Ashkenazi raised the full-year 2026 spending target to between $195 billion and $205 billion, well above the $186 billion Wall Street had expected. She cited accelerating capacity demand. Free cash flow flipped negative in Q2 to roughly negative $5.9 billion, as CapEx outran operating cash. Alphabet funded the gap partly through debt, $20.3 billion in senior notes, and a $49.6 billion equity raise in June. GOOG shares closed at $341.91 before the print, and traded lower after hours. The cloud beat is real. The EPS headline is not what it appears. The spending has moved higher again.